Hello, good morning. It's Annie. I'm the Senior Customer Success Manager at Swoop for Advisors. Thank you for joining our webinar this morning on R&D changes and what it means to your clients. Just a bit of housekeeping. We are recording the session and we will send it out afterwards, probably tomorrow, for you to catch up. If we have any technical difficulties or we disappear or sound goes, do stay on and we will try and get that fixed as soon as possible. I'd like to introduce you to Sahil, our R&D expert here at Swoop. Sahil, can you introduce yourself, please?
Yeah, hi, Annie. Thank you so much for the introduction. So, my name is Sahil. I'm the R&D case manager here at Swoop. So, a little bit of background about my education. So, I'm a part qualified chartered accountant pursuing my ACCA studies, and I'm a qualified lawyer from India. Studied my LLB from University of Mumbai, and then I came here to study my master's in financial law from Nottingham Trent University. So, having that knowledge of accountancy and the legal side as well. So, I think R&D is the best domain I could work for.
Fantastic. Well, we're very lucky to have you. Um,
Thanks a
and
lot.
I think if we sort of start off, can you explain to our advisor what is R&D? Why are they so important for businesses? Why should we still be sort of focusing on R&D tax credits?
Right. So coming going back in the history, R&D was introduced by HMRC in early 2000s to promote research and development in the country, right? So the domain of R&D or the definition of R&D was very strict before that only specific category of businesses would qualify for R&D. Now, in a broader sense, HMRC has included mathematics, formulas, biological advancement, anything that has scientific or technological advancement that qualifies for R&D. Now, I understand that startups have a lot of good aims that they want to explore or they want to grow their businesses, right? And they don't want to go for equity or debt at the moment. So R&D, it could be a good option for a free cash flow, which could be every year recurring for the businesses to invest in their project. So not only they are enhancing their projects, but they are saving their tax money and are eligible for a cash refund from the government.
Fantastic. And I suppose it'd be really good to sort of drill down on how can our advisors sort of spot the opportunities? What businesses would typically qualify? What do they need to be doing to be able to get these R&D tax credits?
Right. So for any business to qualify, I personally look at like if it basic sense, if there is any technological or scientific advancement in the business, it definitely does qualify. Now, for an example, a company make having a research on cancer disease, that will definitely qualify for R&D, even though there are hundreds of science companies who are in the industry doing the same thing. Now, another thing would be if any company is reverse engineering any product that will qualify for R&D. Now, taking an example of this particular bottle, right? This is a bottle. I love this particular bottle. I want to make this bottle, right? But there's only one manufacturer in the country who makes this bottle and has a monopoly. So if I reverse engineer it, like for an example, I first assess the lid, I first assess the quality of the bottle, the material, and the ultimate design of the bottle, and I successfully make this bottle, or I am in the process of making this bottle, to not only to cut down the monopoly, but to sell it at a rate where people can afford, right? So that will still qualify for R&D, even though there is an existing product in the market, but that product is a trade secret. So that will qualify
Okay.
for R&D. So the domain right now is pretty vast for what companies could or could not qualify.
Okay, amazing. And Um, I think that there have been so many changes, recent changes from HMRC, and I think that's made some of our advisors quite nervous when it comes
Right.
to sort of applying for the R&D tax credits and getting
Right.
involved. Can you elaborate on these changes? What does it mean? Is it now more difficult to get the R&D tax credits? Are more claims being rejected? What do our advisors need to know with that?
Okay, so coming to the first part of the question, what are the changes? So being going back in time, 1st of April 2023, HMRC reduced their enhancement rate from 130% to 86%. Now that means for every pound you have an income, for every pound you expense you incur on your R&D project, you could get back 2.3 pounds as a tax credit. But now, after 1st of April 2023, for every pound you incur as an expense on your R&D project, you get back 1.86 pounds. So there's a straight drop of 30%, right? From 2.3 to 1.86, number one. Number two would be for the cashback. Now, for a loss-making entity, if they want cashback for their any R&D project, the earlier the rate was 14.5% on their tax savings. Now 86%. Oh, sorry, now it's 10% on their tax savings. So again, from 14.5 to 10%, another 30% drop, right? Number three would be incorporation or implementation of AIF legislation, which is additional information form. Now, additional information form again is another legislation introduced, to compile the calculation and the technical report in a very summarized manner, which ensures that each and every HMRC's question have been answered for the project, right? So that AIF, now surprisingly, in the month of 8th of August, it was introduced, and any claim made after that from 8th of August until the mid-September, any and every claim were rejected by HMRC because providers used to forget or they missed out the AIF part of the claim, and HMRC rejected their claim, even though the claim was solid, robust, but because of the missed legislation, the claim was rejected, right?
Okay.
And the lastly, in the autumn changes, there are two big announcement for R&D tax credits. Number one, now, for an example, if any company got a grant towards R&D, right, any R&D project, so earlier they could not qualify for R&D tax credits, because to qualify for your tax credits, you need to spend from your out-of-the-pocket expenses. You need to spend your own money towards your project, right? Now, because it's a grant money, it's not your money. You were not qualified before. But now, from 1st of April 2024, you will be qualified for R&D. Now, for an example, you're getting a grant towards an R&D project, and you can still qualify for R&D tax credits. So it's like cascading effect, getting double money or double grants from for a singular project, right? Number two would be incorporation of merged scheme. Now currently there are two schemes, which is the SME scheme and the RDEX scheme. So the incorporation of merged scheme in a sense is very easy for an R&D tax provider, such as myself, to file the claim in a very systematic manner, and for the client that the claim would be processed in a very quick manner. That the processing time of the claim would be very less, rather than 6 to 8 weeks, which is now. But again, there are some legislation which are to be read out by HMRC soon. So hopefully we can hear back anything from HMRC.
And just to touch on that, Sahil, with the
Yeah.
two different schemes, that's for you to decide which is the correct scheme. Our advisors don't need to get
Correct,
too
yeah.
involved with that.
Yeah, I will identify everything about that.
Perfect. Okay. And with the additional information form, again,
Mhm.
that's something that you will fill out and make sure that's robust and solid and that
Yes,
the business is fully eligible for the
yes.
R&D. Amazing. And I guess so obviously there is a lot of value for our advisors to be having the conversations with their clients and to make sure that these R&D tax credits where they're due go back to the businesses. What sort of other advantages are there and benefits of advisors helping their clients with the R&D tax claims?
Okay, so the number one benefit would be, having a passive stream of income for all the eligible clients for R&D, and that too recurring every year. Now, for an example, if a company is actively engaged in the R&D and is a going concern status, so naturally that will qualify for R&D, and it'll be a passive income for the advisor, for their R&D clients will claim. And not only that, the burden is taken off their shoulders, right? So they don't have to have the headache of, oh my god, now what to do, what to do, what not to do, because the burden is taken off their shoulders, right? Number two would be, if the client is happy, for an example, so he or she might introduce other clients to the advisor, okay, to expand their business. And again, the advisor can generate another passive income by bringing their clients to us, by increasing the passive streamline of income. That's biggest, that's biggest perk for advisors.
Amazing. And then, of course, for the business to have that money um, come back to them where they can continue sort of developing
Correct.
their business. Excellent. Um, for our advisors, I guess what is the process? How much work does it involve on the advisor's part? How long does it take? What documentation do you need from from our advisors? What's the process, Sahil?
Right. So I'll just give you a brief overview about the R&D claim, how the process works. So R&D claim is divided between two parts or two phases per se. Number one would be a compliance calculation, which has all the numbers in an Excel sheet. What is the estimated tax savings of the company and what claimable cost or what eligible cost we are considering for the company for their R&D claim. Number two would be your technical report, or the second phase would be your technical report. Now, technical report is again the backbone of your entire R&D claim. It justifies each and every penny you're claiming back from the government, be it in a form of tax credit or in a form of cash repayment. Right. So when you combine these two documents, you have a ready-made R&D claim. And once you have those two documents in line, you go for AIF, which is the additional information legislation, and then you go for filing as from amended CT 600 or known as CT 600L, which I will file on your behalf or the client's behalf, right? And once I file that, within 6 to 8 weeks, you get to hear back from HMRC regarding the outcome of your claim, right? And the entire process, right, from the day I get the documents until the money is back into the client's account, it takes approximately 1.5 to 2 months, depending upon the proper timeline.
Amazing. Um, Thank you for that. And I guess sometimes you will have calls with our advisors clients that feel that they're eligible for R&D tax credits, but they're they're not. So how do you go about that sort of, I guess, interview process with the advisors clients?
So the number one thing I could do or I do was teach them how I identify the client if it's eligible in the market. Now, for an example, now I have a client. I have a client. Okay, so they make machinery who detect molds in your houses. Now I know, and everybody knows that there are existing machinery which are this big in the market or this big, right? But the client, they're making machine which is the size of a candy or a chocolate for that matter, right? So that is considered as a technological advancement, even though there is an existing technology in the market, okay, for the same price, for the equivalent price. So but there would be a technological advancement, because if you can compress the existing technology into a smaller product, that would
Mhm.
considered as an R&D qualified client. So that's how I look at how identify the client. If it's if the business has potential, if the product has potential that will impact the overall industry in the long run, that will qualify as R&D.
Excellent. And of course, if you have that call and you realize that it's not, then we're obviously not going to put forward the claim, and you can give the reasons as to why they're not eligible for the R&D
Right.
tax credits. Fantastic. And it's good to hear that sort of recent case study about the mold detector. Do you have any other examples of, I
Yeah.
guess, ones where accountants might not think that they might be eligible or?
So we have a client who's a venture capitalist. Okay, they are in this industry of food and drinks, right, and which is a very competitive industry. So they constantly keep trying and producing new products, right, which not only help the retailers but also the your end consumers. That the wastage is low, the economy is thriving. It impacts the environment. So that will qualify as R&D, even though there's an existing product in the market, but your end goal is to, reduce cost or protect the environment or increase the overall taste of the product. That will qualify as R&D. Now we had this client and we managed to get back £400,000 worth of cash repayment from government. So that was a huge win for us
Well,
in terms of any R&D claim.
and is there a upper limit of what can be put through as an R&D
No,
tax
so
credit?
there's no upper limit on claiming in any R&D cost, but there's a limit which you can get back from HMRC as a cash repayment or tax credit. But then again, that depends upon case to case and industry to industry. But if you're asking if there's a limit on how much I can show HMRC on my R&D spend, there's no upper limit. You can show
Amazing.
any of the true costs which you have done towards R&D.
Fantastic. And I think it's probably worth touching on how we're able to assist with an R&D advance. So,
Yeah.
you sort of run through the timeline of how long it's taking to get payment back from HMRC would be helpful. And what can we do in those instances when a business might need that money a little bit sooner?
So what happens is now when you have a history of claims, it's usually easy to get back an R&D advance, right? Now, for an example, you just made a claim and you're in urgent need of cash flow. What you can do is you can take a loan or advance against your existing R&D claim, where you can get back 80 to 85% of your payout, and then you can pay back the loan provider 100% from your R&D claim when you get the benefit back from the HMRC. So it's like quick cash return, and not it's not you paying the loan provider, but it's HMRC paying on your behalf. But then again, to
Fantastic.
have that, it's usually advisable to have a history of claims. So if you qualify, I would say you can start as soon as possible. Now, the biggest benefit is that you can go back 2 years. Now, for an example, Annie, you're in the financial year 23, 24. You can still claim 22, 23 and 21, 22. You can go back 2 years if you didn't know that you qualify.
Excellent. So you can go back 2 years,
Correct.
and I guess is there a way where if an advisor has like missed the opportunity for spotting this for their client and their client's unaware of these R&D tax credits, is there something that you can do, maybe like a review of
Yeah,
clients to see if
absolutely.
there's
Absolutely. So what I can do is I can have a review with the client and I can review the businesses. And if it qualifies and the client has not done any claims in the past, you can go back 2 years, which would be a good cash flow for the client.
excellent. And do you do two separate claims then for
Correct.
those?
Two separate things, but the timeline would not differ much. The timeline would differ by a couple of weeks or days for that matter.
Fantastic. Okay, that's great. And um, is there obviously we've touched on the different industries
Right.
that can are sort of typically eligible for R&D. Is there anything that we can provide to our advisors to sort of help recognize these industries?
So recognize an industry, so I can help the advisor and how I personally identify the client. Right now, for an example, let's just say advisor has successfully identified a client, but this particular year the claim amount is not much. It's relatively small. What I can do is I can help the advisor to structure the financials in such a way that maximum benefit can be bought out via this particular R&D scheme, right?
Amazing.
So in the forthcoming years or in the upcoming years, you get the maximum benefit from the R&D, and everybody's happy. Advisor is happy, client is happy, we are happy.
Fantastic. And I think what we always say at Swoop, because we help with so many grant applications, any
Right,
business that is successfully won a grant, they're really good businesses to look at to see if there is any
right,
R&D claim that we can help
right.
with.
Yeah,
And this is one of the reasons that we're now helping with R&D, is so that we can look after all of that in-house to make sure that the businesses are getting everything that they are eligible for.
yeah,
Um, it'd be really good to ask if anyone's got any questions, then do fire them over. If you're feeling shy, you can always drop me an email after. And Sahil is very, very happy to set up a call and sort of run through how we can help you in your practice with the R&D tax credits, and a review of any clients that you might think. I think sometimes, Sahil, you do a review of the business and the website and what they're doing to see as
yeah.
well.
Yeah. So number one thing I usually it's like cheat sheet. Website is like the Bible of any business or any industry. Like website is the Bible. So what I do is if I think this business qualifies, I check their website, because who are we? What do we do? What are our cultural names? So that gives me a brief introduction or a brief overview or an idea that if the company qualifies for R&D or not. So 80% of my work is done right then and there.
Fantastic.
Yeah.
And I think the key takeaway is that there have been a lot of changes from HMRC with the R&D tax credits, and I know it has made a lot of people nervous. But actually, there's nothing to be nervous about,
Right.
because you're making sure that the claim is robust, it's eligible. You're putting it forward to HMRC. We do
Yeah.
that all in house within Swoop. So you're writing the technical report, the additional information form, putting it forward to HMRC. So actually, there have been changes, but it's not necessarily a negative, and it's not
No
that more
negative.
claims are being rejected.
Yeah, the reason, the number one reason I think the claims are being rejected is because I don't want to pinpoint or blame anyone, but the thing is, what I have seen as a trend is that a lot of unclaimable costs are being put in the claimable costs, which leads to rejection of the claim. Now, HMRC, they're tax agents, they're not fools. They understand what the claim is and how much the claim should be regarding on
Yeah.
the industry. So a lot of when you put a lot of unclaimable cost to enhance your claim, in terms of enhancing the client's benefit or getting more money out of it, whatever the reason could be. So that is the primary reason why the claims are being rejected.
Okay. Brilliant. So as long as what you're
Uh,
doing your due diligence, you're making sure that, first of all, the business is 100% eligible, that what they're doing qualifies for R&D, and that we're only putting through a claim for what has been spent, and then these claims are flying through as normal.
Correct.
Fantastic. If anyone's got any questions, I'll just give it another couple of minutes. Please do fire them away. What we'll do is follow up with a nice one pager tomorrow with the recording. And yes, Sahil will be really happy to have a conversation on how we can support, um, and especially like looking at the sort of full service that we can offer with the grants and then the R&D tax credits afterwards. But hopefully it's been helpful for you and it's squashed any nervousness about the R&D tax credits. Sahil is certainly very well placed with his qualifications to talk about anything R&D. So do get in touch, and we'd love to have a conversation to how we can help. Brilliant. I think everyone's being quite shy today, so that's okay. We'll finish it off and we'll follow up, and we'll put a meeting link in so you can set up meetings with Sahil. Thanks for joining.
Thank you. Bye bye, Annie. Bye.